Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market, euro currency in particular. As usual, we have prepared vehicle report, where actually we have tried to cover some most important driving factors for the Forex market and for actually United States economy in general. So a lot of events, it's just rising as the big snowball, and the recent collapse, as we said, well, we think that it's actually the speed of this collapse and so strong pace of this collapse that we see in strength of the United States dollar was coming not only because of the CPI numbers and not of the CPI mostly, but I suggest that it mostly comes to other problems that now are coming on the surface. If previously the same topics, the same moments were discussed as potential risks for the United States economy, now they're becoming reality. We also talked about the same risks for a long time already, but now you actually could see it in the real results. First of all, I'm speaking about the United States Treasury bonds auctions, particularly speaking the 10-year and the 30-year. They were really poor. A big drop of the bid to cover ratio, high final yield of the placement. For a 10-year bond, it was 4.56. It's really high yield. For the 30 years bond, it was a bit not as bad, but also worse than the previous auctions as well. So the things that many analysis investors were talking about, that very soon demand for the United States debt start dropping because nobody actually would be able to buy such amount of debt, now it's become reality. Second reason is the recent statement from the on the Fed minutes, that mostly were more hawkish that investors would like to see. And all this stuff together with other interesting details that we've got this week, creating this background that triggering demand for dollar and significantly increasing the yields of United States debt. So we have taken a look in the detail on the subjects and have found some vital driving factors that, but our opinion, will become very important, and actually by these particular drivers euro currency will be moving until the June at least. So the situation stands really tough currently. So now if we take a look at the technical side, actually the recent drop should not surprise us too much, because approximately a month ago we have found and investigated the bearish grabber on the quarterly chart on the euro currency that should suggest significant drop back to the parity. And current move is just some details that we see on the monthly chart on the lower time frames that discovers the performance of the market in a row with this major big pattern that we have. On the monthly chart we also have more bearish signs this time. So you could read the analysis of the monthly chart in the report. If we speak about the short-term perspective, on a daily chart we see really great downside action, but the market is strongly overextended right now. As you can see how deep market stand in an oversold area. At the same time, if we take a look at the weekly chart, this is strong confidence support area and also very big COP target. So in general, market has good background to show more or less moderate bounce here. At least chances for that are increasing. The only question is whether the weekly bounce will start right from here, or market will try to complete this ABCD pattern first. This will not be some breakout for the weekly chart, because the difference here is approximately on 50-75 pips, which is very small range for a weekly chart, and mostly it will be looking like the flirting around the major support. But for a trading process on a daily intraday charts, that will be very crucial. So this is very important to us because we intend to take the positions. And currently, what really we intend to do in the current circumstances, I suspect that we could start from the pattern that might be formed on the 4 time frame chart. That could let us to feel relatively safe in a possible further action. So if we'll take a look at the 4 time frame chart, here we have the OP that we discussed on Friday. And recall what we said, despite that market oversold, probably market will try to complete OP before any pullback will start. And now the OP is done. By the Judd Napoli framework, we have so-called Kibi trade. It is not covered in his book, but this approximately has the similar features as a stretch pattern. So if the stretch is the combination of the fib level and the overbought or oversold, then the Kibi trade is a combination of the expansion and the overbought or oversold. Both patterns suggest some retracement. Now we do not see yet the signs of it, but actually we do not want to take the long position here. Since we have very strong acceleration, it's really good chances that after the OP, market should keep going to the XOP. And from that standpoint, here it is logical to see bread and butter sell. And I suspect that, well, at least it is reasonable. We could start the coming trading week with waiting and watching for a possible retracement with a chance to take the short position based on the bread and butter sell, for example. Once we will take it, we will be possessed for possible next downside target. So if we'll take a look on the daily chart, this is approximately 105.80, which is the XOP of the initial ABCD pattern, or potentially with this ABCD right to the 105.15 area, 105.20 area. This will be the next destination point. But since we're at the oversold, appearing of the bread and butter on the 4 time frame chart led us to step in relatively safe without any big risk. And then we just will be protected with the break-even stop and see what will happen. So that's our idea for beginning of the week. And then we will see. In fact, for us, the major task here is to catch the proper points, proper moment where the and if euro currency starts showing upside reaction as a response on a strong weekly support area. That's our task. Obviously, the pattern should be extended, so it might be some hand shoulders on the 4 time frame chart, for example. But while we're going into this moment, we're not clearly know in what particular point this will happen, either right from this point, where we stand right now on the weekly chart, strong support, or as I said, market will try to complete this OP first, then we'll start to pull back. We do not know that. That's why while we will get in waiting for some signs how it will happen, we could focus on some minor patterns on lower time frames and start dealing with them, and then we will see where we will go. So that's just our opinion on the current situation.